This video is taken from our premium membership. Link in the description. Low cost continuation of the market with daily content. We have a Discord, we have a platform. We'll see you in there. So welcome to today's video. A little bit different. We are putting this on YouTube so everyone can see it. But on the screen, premium, right? Tomorrow is the 1st of June. We are changing how we sell premium. It is going onto a new website. It's going to be more simple on our courses website, so it'll be no longer officially on there. There will be a link like what you can see there, existing members to log in and how to sign up, but there is going to be a price change. So if you want to buy now, £10 a month or £100 per year. On the new system, it would be £15 a month and £120 per year. The reason being we're adding a lot of new stuff. Some new stuff's gone into premium today. So yeah, we're making some big changes, more trades, more degen stuff, more investing systems, pretty good stuff. But let's talk about the most obvious thing, the market. Okay, so overall the markets are not looking too great in terms of crypto. Bit boring, bit sideways, a bit of a lull. We're going to talk about other markets in this video, as always with the market roundups, but obviously we've got the most obvious thing that is pressing against everyone's lips right now, the debt limit. Now, we have been talking about this quite a lot over the course of our Discord chat in terms of articles that have been written. Go over to our main website, learningcrypto.co.uk, the US debt ceiling, an article by Jamie. Really, really good read in terms of everything that you need to know about it. So make sure you have a little bit of a digest of that. It's free to access. And the bottom line is, the big question is US default. Will that happen? Personally, I think that's unlikely, but there's always that little bit of a niffy sniffy that it could happen, right? So just be mindful of it. So the fundamentals of it would be pretty catastrophic in terms of where's the money going to come from? Where's the liquidity going to go? We do not want to have a liquidity crunch, which could be a big, big problem. The markets will literally go tumble, all right? So overall, market this week, I've not done this on Learning Crypto this week because we've not had any videos due to the bank holiday. So US openings, jobs, hello, today. See what that looks like. We've got a few people speaking for obvious reasons. We've got the Eurozone, PMI, manufacturing and CPI unemployment data are all on Thursday. So there's a lot coming out on Thursday that could affect the dollar. And most importantly, non-farm payrolls. That's always a sticky point. But overall, the markets in the US, the S&P, the Nasdaq, look pretty okay right now. Very, very interesting. You know, we're talking about the likes of Germany, the Eurozone, potential recessions all across the board. And the US have not shown any sign of that yet. However, as I say, big, massive loom on this debt deal, right? So yeah, it's all very interesting. It all kind of doesn't make some sort of sense, but it does in certain situations because we've seen some massive, massive moves in the tech stock world. And yeah, could be fun. But this is the one that people are looking for. You know, a commodity crash signals deflation is taking hold for now. The cost of everything from metals to crops has plunged this year. But we'll see how things go. Now, what this basically comes down to is the fact that high inflation eventually over time brings on a recession. But the prices and the unemployment data of certain things are not giving us that information yet. Eventually, maybe, big what if here, if that all-time low unemployment rate in America eventually turns around and really soars, you're probably going to see the recession. Now, traditionally, that's what happens. It's called a circle. You've probably seen a circle in life, right? Where you've got people that are losing their jobs, they cannot spend money, their monies then affect the prices of stocks, and then the stocks will then gradually over time tighten their belts because they're not making as much revenue, cutting staff, delaying products, having a supply and demand problem. We've seen it with the car market, with the electronic chips and stuff in the past. Huge things, even the littlest things like tires, right? You can find problems because that's going to lead to a backlog of the most obvious thing. People are not buying cars, as an example, right? So with that in mind, we've seen it in history. History will tell us this. Often there's a recession off the back of something. High inflation is often one of them. So yeah, we need to be somewhat careful. Anyways, let's talk about crypto, because it is the most boring thing on the planet. I'd rather watch paint dry at the moment, no offense, but it's just the way it is. Now, I've been saying in my latest analysis that I think we're going to go down because we've had a very beautiful rejection of this level. Really clear, obvious rejection, right? What does it mean? It signifies that there's a little bit of like lack of demand, essentially. A little bit of, strength isn't quite there. It was looking really good the other day. Everyone was getting really, really pumped up and excited. However, what happened? Well, not what we wanted. This is twice we've went into this region and went back up very quickly. Boom. Twice this has happened. Now, this was a lot more convincing, but for me, this level where we are right now has to hold. So this daily time frame candle, for example, right now, is pretty crucial to hold. If we do continue going lower, I'm going to say it, I think we're going to go back down to that 25k level and potentially lower towards this 24, maybe a bit lower than that, we'll see. However, when we look at the higher time frames and have a little gander here, we've got quite a nice little structure, level, right? So it's a big bouncy area. Is there demand there though? I don't know. Maybe, maybe not. We'll see. We'll see if the bulls turn up. So still don't think that this is going to fully iron out just yet. I still think it's pretty boring, but in terms of structure, we've got a clear downtrend at the moment. It's not very clear, but you get the idea. It's very sidewaysy in certain parts, but ultimately is slowly trickling. Other things to make note of. Now, what's given me some encouragement is the fact that the BTC Dominance isn't just completely going up. Now, why do I say this? Often when BTC goes down, sometimes dominance will also go up because altcoins are dropping more. Altcoins are not dropping more, ladies and gentlemen, which is really good. The likes of Cardano is up 0.92% on the dominance. BNB is up, Doge is up, even Ethereum up slightly. Quite a few of the other ones are, but obviously the most important one would be USD, stablecoins and stuff like that. For obvious reasons, people are bugging out the market into, for obvious reasons, the stablecoins, right? So that's obviously a big factor to take consideration for. But yeah, when we're looking at the BTC pairs, quite a few of them are green. Even some of the Ethereum pairs, some of them are quite green. So yeah, it's just like one of those situations where it's a little bit random. But when you look at the chart on terms of like Ethereum, I'll give you an idea. I'll just give you an idea. This is what it looks like. It's a little bit sluggish and slow, and it's nothing, no real clear and obvious direction. It's nothing like what I'm going to show you in a second in terms of the overall trend of something, right? So let's talk about the overall trends of other markets, right? So this is important. I want to start off with the dollar, just to give you an idea. The dollar is slowly going down. We'll see if it rejects here. Talked about it yesterday in my live stream on Twitch. I think we are going to reject at some point because of all the information that could be coming out in Europe. That could, create a lot of information that could weaken the dollar, providing the news. If inflation starts to come down in the Eurozone, which is relatively quite high, and people start looking to invest again, and so all kinds of stuff like that, it might be quite good because the energy prices are going down. So it may well factor in that situation. But we've also got the US debt deal. A bad deal could be pretty interesting. A good deal could also strengthen the dollar. So there's always kind of those situations, but the market with uncertainty could be interesting. If there is still uncertainty and the debt ceiling isn't a really good deal, we may find that this will go down. We may also find the likes of Bitcoin, the likes of gold, silver, etc. might well go up. So that is looking pretty much clear direction. Now where it's gone, but we've got this potential lower high. However, let's talk about the likes of the Nasdaq. So this is the tech stocks right now. Yeah, so we're talking about the big R word before, recession. Now, often you find that in a recession, technically, the markets are not very good. The markets are not very healthy. Now, yes, the markets are going up. Yes, there's a lot of big stocks that are a part of this situation. There's a few assets in current, stocks right now. Even non-tech stocks are over all-time highs right now. Absolute crazy when you think about it, right? So Bitcoin clearly is not following these markets right now. It's following gold. So it would indicate that the market's okay to invest for investors. And this is why gold, I don't think, has flew past this $2,000 level yet. because people are still turned on by the prospect of making money in the stock market. So what is it? Is it a bull market? Is it a bear market? Have we reversed back from the bear into the bull? Because we have had a correction, and I was pretty bearish. I was thinking we're going to go much lower than this, because it was looking absolute dire. But a 37% correction for some people is pretty stomach churning, right? Especially if you're big into your tech stocks, as an example, right? But we have had a pretty sharp recovery. Now, let's talk about it. These stocks, Apple is very close to all-time high. What? I know. AMD, Amazon, you get the idea with the trends here, but you can see that this isn't as healthy. But Coca-Cola has brought out a brand new all-time high, which is pretty damn cool, right? So all these kind of, oh my God, recession, oh my God, why is certain things looking really... It's not. This is the thing. A lot of things don't look as bad right now, which is mad. I mean, look at Microsoft, nearly all-time high again. And then you got the biggie, Nvidia. Crazy, right? So a lot of tech stocks over the last couple of months have been going absolutely blazing. But go back to gold. Gold could break out of this level and absolutely fly, right? If there's market uncertainty. But money seems to be flowing into tech stocks at the moment, into other things, stocks, commodities, random stuff, right? It's a bit crazy. But not into crypto yet, not into gold yet. So that would, in terms for me, I would feel that Bitcoin and gold are very similar and may well be the hedge against it, hedge against that lack of movement and uncertainty in the market. But we have got the likes of halving to worry about. We have the element of scarcity and opportunity. What if money from the tech stocks rotates into Bitcoin or into crypto from profit? Maybe that could happen. That is a big what if and speculation for obvious reasons, right? So yeah, it's not all doom and gloom just yet. I know there's a lot of data out there that isn't looking great, but in its current moment, it's not too bad right now, which is a bit mad to think. Play what you see. If you see it and it looks horrible, it probably is horrible. If it looks good, it probably is quite good. Try not to get FOMO though. But in terms of crypto, which most of us are here for, we've not moved yet. We've not done anything. We're sitting there. And to prove this to you, look at these altcoins. Some of them, I mean, that's a really old fib. Some of these have like literally sat at these accumulation levels for months. Nearly a year. Over a year potentially here for Avalanche, which is crazy when you think about it. So it's been just trucking along. Quite a lot look like this. Just look really, really horrible when you look at it. But for me, it's opportunity. It's opportunity to buy low until the market fully turns and the bulls come back to crypto. The bulls seem to be sitting around the Nasdaq right now, buying all the tech stocks, buying all those kind of speculative assets. Some of them are good, some of them are bad. They're very cyclical. They're very much like crypto, but nowhere near as crazy. But you get the idea. So there we go. All is done. Don't get FOMO in the tech stocks yet, please.